Hello, this is Ed Burke of PlaceForTraders.com for Tuesday, March 31st. Starting off in the June S&P. In my last video, I talked about the pivot level of 818.5 being our guide to the direction of the market. Below 818.5, we're looking at a bearish market for Monday. Needless to say, the market was very bearish on Monday. The market had trended lower all Sunday evening session going into Monday morning. By the regular session of Monday morning, we had traded below both lines of support I had. I had the first line of support at 807, the second line of support at 799. We're trading more in the 790 range by the open. Now around midday, because I didn't have any other lines of support, I did send out messages saying that monthly pivot was 785. We were trading right around that range of 785. The low was 780 at the time. I said the next line of weekly support down there was 771. It was my opinion. I didn't think the market would trade as low as that weekly support at 771. The market had a low of 775.70. Monday's trading session, and then in the last hour we rallied back to close at 784.30, which coincidentally is right around our monthly pivot. As you can see here, market was lower Monday. This black line, this long black line I have right here on the charts, is the monthly pivot. Coincidentally enough, for Tuesday we're looking at the daily pivot of 785. It's converging with that monthly pivot also around 785. So the market closed at 784.30. We're looking for the market. If the market's above 785, we're looking at a bullish market. That's for daily and monthly time frames. So it's that we have that convergence of those two different time frames. Very important for tomorrow's trading session. I'm looking at the first line of resistance up at 794. The second line of resistance up at 804.5. For support, I'm looking at the first line of support at 776. The second line of support down at 767. Now also on the monthly pivots, I mentioned in the last video also that high that we seen on Tuesday of 830.5, and that high we had on Friday where the market went to 829 and some change, that we fell just under that first line of weekly resistance. And here you can see it right here. It came in at 831.5. So we did, late last week, we hit that resistance up on that monthly time frame, that first line of resistance, and failed. I had also mentioned the 18-period weekly moving average being 832.5. I've been talking about that for a week now. I'm going to get to that a little bit later, but I wanted to also talk about the relative strength index. Right here, we're in an overbought area. Classically, when you look at the relative strength index, when you're over 70 in the relative strength index, that's an overbought condition. Of course, you look for divergences between price and the indicator. Right now, with this turn down in the market, over 70 is overbought and under 30 is oversold. You can also look at the 50 that 50 point on the relative strength index. We're right at this 50 point. I also use the relative strength index, that 50 point. If you're above 50, that's a bullish market. Below 50, a bearish market. So we're right at that 50 level on the relative strength index. These are daily charts. Now what I'm going to do is I'm going to switch gears and go over to a weekly chart right now, if I can. Here. Here's the weekly chart of the S&P. This is that 18-period moving average. I had talked about this for a week. Now, this 18-period moving average, is, you say on a weekly time frame, what's the importance or significance of the 18-period moving average? I was just looking at every time in the last year we've had any kind of a rally in the market, this 18-period moving average. I adjust to what the market says. I don't always use the same moving average. You could play around with moving averages and look if one moving average works better for a market, then that seems to be more significant than just saying I always use the 20 period or I always use a 40 period. But this 18 period moving average over the last year, you can see we bumped up against it there. We came back in here, we bumped up against it. We had a little move in the market right there. We bumped up against it. And last week we came up to that 18-period moving average and bumped up against it and went lower, of course. Now, I talked about this the last time. It's been about a year since we had crossed that 18-period moving average. Right in here, we see obviously we crossed over that 18-period moving average, and the market held up for a good 2 months before we seen the market fall back under that and then trend lower. And ever since then, that 18-period moving average has served as a good resistance in the market. Also, down here in the relative strength index, I talked about that 50 level in the relative strength index. You can see that we haven't been, I drew this trend line right at that 50 level. We haven't seen also us get over on a weekly time frame on the relative strength index since this rally back in here last year, when we crossed over the 18-period moving average here and we stayed relatively strong for the next 2 months before the market continued to sell off. That was the last time we really crossed over there. Every other time here also, we hit this we hit that 50 point, and that served as a good resistance. What's interesting right here is that once again we bumped up against that 50 in the weekly relative strength index, and now we're heading lower. So, like I said, with the pivots, you're letting these are forward-looking numbers. You're taking past information but making a projection for the next trading day. That's what these the pivot and the lines of resistance and support are for. You're not just taking moving averages or what the market did in the past and make an assumption that, oh, now the market has to go down. No, we're going to look at what the market's doing. So we need to stay over 785. All important. We have that convergence daily and monthly pivots coming at 785. But we also see some indicators that show that this market could have hit some big resistance in here. But like I said, we'll use the pivot numbers to dictate which way we're going to go in the market. Some numbers that come out on Tuesday morning, 9 o'clock, you got the S&P Home Price Index. The expectation is a drop of 18.6%. 9:45 a.m. Eastern Time, you have Chicago Purchasing Managers Index. The expectation is a reading of 36. And then 10 o'clock a.m. Eastern Time, you got Consumer Confidence. The expectation is a reading of 28. That's all I have for this evening. Thank you for tuning in. If you haven't gone to my website as of yet, it's placefortraders.com. Thanks a lot and good trade.